morning, good morning, everybody. Uh, Sorry about that. Got a phone call that I didn't. Oh, I just got another text reminder. Let me. I just got another text reminder. I can't remember who it was in the gang. Speaking of the gang, let me get in the voice and send out the bat signal. Let me send out the bat signal in the voice. Yeah, bear with me real quick. Copy. Then paste. Send now. All right. Got the back signal sent out in the voice. Now, I can't remember who it was, but somebody was asking me about the 90% off and the 80% off with Apex. I got an email and a text yesterday because it was supposed. I told him it was ending last night at 11:59. I got an email and a text last night saying, "Hey, we're extending it through Memorial Day." So they extended 90% out through Memorial Day. So it's gonna be 90% off through Memorial Day. It's I think it's like 7 more days. Let me see. 1, 2, 3, 4, 5, 6, 7. Yeah. So it's 7 more days. So it's extended through Memorial Day. I think it end on the 31st at midnight. So 11:59 on the 31st, I believe it ends. So you got more time to buy the 90% off. I just got the text that made me think about it. So whoever it was, I can't remember who it was asking about it, but whoever it was asking about it is they extended it 90% off, 1 day pass. So there you go. Now, with that being said, good morning. If this is your first time tuning into Tim's Tidbits, and I don't have my thing together. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome. But I also want to give you a nice hearty thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's Big Spider, for those that don't hablo español. And you are tuned into another episode of The Overnight Price Action Review. Now, let me see who in the... One of my kids just shut the door. I guess I'm talking too loud for him. Let's see who in the chat, and then we're going to get right to it, man. Let's see who's in the chat, and we going to get right to it. Let's see who's in the chat, and we going to get her done. Here to learn and share. Good morning to you. The birds are chirping. What's up, Thomas? What's going on, Tish? What's going on, E-Rock? What's going on, Deborah? Shout out to everybody else that's in the chat. I see more numbers than I see names, but them all the names that I see, so that's all I'm going to say. Let's move on and get right into it today. Okay. I was up this morning trading the London, so I got some extra stuff on my chart. Let's go to the ES. I was trading in the London. On the NQ, I tried to get short and got stopped out. And then I sat there for a minute and I noticed that we were going to go back to the upside and attack this buy side or higher because we had this imbalance above. So I stopped wanting to attack this sell side and I got in a long and it made me smile real big because I got back out of the red. and into the green. Yes, so that's why I was trading this morning. I was trying to get short. I thought we were looking as if we were gonna, just keep dumping down here. I was looking at this as coming back to this sell side before trying to proceed up, because we had this 15-minute imbalance there. I was like, oh, look like we're going to draw back down into that before we dig into that 4-hour imbalance a little. And it stopped right there. Stopped right there. Came back and stopped me out. I was like, you dirty dog, you. And then I just sat there for a minute and watch price. And I said, okay, we're going to go up here. And I got long and got back out of the red. Sometimes you're going to take losses, people. You're not going to win every trade. But when you take a loss, you just stand on business. Remember the concepts. Pay attention to the clues and price. And execute when you see a setup. Don't be afraid from that loss. Do not be afraid from that loss. And that teachable moment was brought to you by Squirrel. Let's pick out the my nose peeling. Let's find 6 o'clock. 6 o'clock on the dot. We opened up at, this is in my way. Make the candles bigger, Tim, so people can see the candles that's on cell phones. Oh, okay. All right, so after we had a little retracement back after hours yesterday. Oh no, that's 3 o'clock. That ain't after hours. Never mind. Ignore everything that I said. Okay, so we opened up here at 52.85. Hey, what's up? More people came in. What's up, Lil Hulk? What's going on? Happy Friday. Hola, Valentin. Hola. Buenos dias, even. What's up, Seawalk? What's up, Kareem? What's happening with you? So we opened up here at 52.85.75. And then we proceeded to move up, and we took out the buy side here on the 715 candle, right, taking out the buy side, and then we pulled back down into the range, right, pulled back down into the range here. This down closed candle here acting as an order block. See how price is totally respecting the mean threshold of that candle right there, right? I don't know if y'all can see my line, but price is totally respecting the mean threshold of that candle. Matter of fact, when it came back and did me dirty, look there. It's the same candle that is coming down and respecting once again. The same candle. Whoa, nothing is by mistake in this market, is it? No, it's not. Okay, so after coming down and respecting that order block right there, I know you say, Tim, how can you be calling that an order block? It's not the last down close candle right there. All right. So when price consolidates here, right, when price consolidates and it expands with displacement, there's your fair value gap. The last down close candle at or near the equilibrium of that consolidation will act as your order block. Remember when we talked about there's 2 different ways to see an order block. One can just be an expansion at a anticipatory reactionary point, and one can be an expansion coming out of a consolidation. Remember, study. Don't stop studying. Don't stop looking at stuff, because we move on to the next topic. Speaking to the mentees there. Okay. Then we expanded up until We'll just give it to this because all of this is consolidated. We made the high there at 1045, but we got to like the peak of the range right here, which will be the low of this 4-hour SIBI and this 15-minute SIBI right here at 145. At 945, we got there. That's the peak of the move, and then we just consolidated. But we made the high we wicked the high at 1045 out of this consolidation right here, right? And then we push down, and here we go again. We got our consolidation here, and in this time right there, as you see, this would be the last up close candle before moving down, and we came up right there, right to the open of that candle right there, right? Respected it 2 times, 3 times before dropping, right? So there you go right there. This is the last one in the sense of coming from the consolidation right there. Now, again, remember when I said we are, when you're looking at consolidation and you got multiple candles in there, right? You now you're pulling teeth, because you say, oh, this is the order block. This the last one going up. This is the order block because this is the biggest body candle. This is the order block because it's the last up close candle. All of them are in the same area. So you're just pulling teeth. I can go through and pick out, it respected the exact open price of this, right? I go through and say, oh, it respected the mean threshold of this. And I can say, oh, it respected the mean threshold of that. I can go through and pick and choose, and it stop. Don't fuss over that. It's a consolidation. It's coming back to that area and being used as an order block. Don't get caught up in the semantics of it, because we're not pattern traders. We trade based off of narrative and draw price action. The midnight open was at 52.92.75. We did us we was continuing this little consolidation that we were in, pulled down, taking out the sell side, trading right back into that same order block. Remember, I had already pointed that out. We traded back to that same order block after taking the sell side, right? We came down to the low of the order block, but the bodies of the candles are respecting above mean threshold. And this is around the time of morning when I was getting stopped out on a short on an NQ and then flip long. But after taking out that sell side right over here, price traded back up, right? Price traded back up, giving us a change in the state of delivery. This would be our change in the state of delivery over here once we traded above this candle. Well, no, traded above this candle right here. That right there will be a change in your state of delivery right there, because we were coming down. And right here, that will be your change in the state of delivery there, right? Once we came up, then we traded back down into it, and then price took off right there. Again, for anybody who's looking at the looking for the turtle soup entry that I'm still trying to force my mind to execute upon when I see it right here. Price here, we came down right there and took out this sell side right there, and then the very next candle we engulf this candle right here that took out that sell side, and then that's the change in the state of delivery right there once we trade that. And again, that's why I say I'm still trying to collect data to see what's the better entry. Will the better entry be coming off of the close of the candle that engulfs, or is the better entry, well, not, I shouldn't say better entry, the most the higher probability entry? Is it entering off the candle that engulfed, or entering off the change in the state of delivery? Because here in this instance, if I was entering off of the candle that engulfed, right, in this instance, and putting my stop right just below the candle, and we don't want to go right to the, we don't want to go right to it, so we're gonna, that's 86, so I'm gonna put it to 85, just 1 point below, right? So 1 point below there, right? So risking 5 points coming off the change in the state of delivery, and then coming off the close of the candle that engulfed, and then coming off the change in the state of delivery, risking 2 3/4 points, a far better risk to reward trade. Coming back to the high right there, it's a 3-to-1 risk to reward coming off of the change in state of delivery in this case, and it's a 1.2-to-1 coming off the close of the candle going back to that high. So coming off that candle, it wouldn't have even been a trade that I would have tried to take, because it's only 1.2, and then coming off the change of state of delivery, it would be a trade I would have tried to take. But in this case, it came back to the change in the state of delivery on this candle there. But like I said, I'm still collecting data to see which has the higher percentage of success rate, the close of the candle or the change in the state of delivery. That's what I'm still studying. For anybody who want to study that and add that to your arsenal, that's the turtle soup entry that I'm studying right now. And remember, just like with everything, your entry has to be based off of the narrative and what's going on. Don't just try to do it just because it's taking a low or just because it's taking a high. You know what I'm saying? Now, ain't nothing wrong with that. You can trade without a bias and you can scalp. You know what I'm saying? You can trade without a bias and you can scalp. All right. Because it's highly probable when you reject the low, you know what I'm saying, you're going to go back to the high that sent you there. Or when you reject the high, it's highly probable you'll go back to the low that sent you there. So you can scalp, but you want to, train your mind to look for setups at key points, at anticipatory reactionary points, in my humble opinion. Okay, so then once we moved up, we moved up with some displacement, created a BISI at 345, paused at the midnight open. We also paused that this would be, I've moved this over to the New York Open, the true New York Open, but the true London Open would be right here, just above midnight, right? And that would be your 130 open. For anybody who don't know, I've been studying quarterly theory also. I was putting it before I went out of town. I was talking about it during the mornings just before my brother passed, and then once I started traveling and going out of town, I wasn't really talking about it much. But we was trading back up, got to the true session open for London, and we pushed through it with aggression, got a nice closure above this buy side right here on the 15-minute. This right here gave me confidence in the long that I was in. I was like, okay, we got to the true session open and we didn't reject it. So that gave me confidence that we would hit this high because we got back to the true open and didn't reject it. Whenever you're looking at how price is acting, if you're not 100% sure of the draw, looking at how price reacts at the open, looking at how price reacts at the open, at the high, at the low, that can give you an indication on which way price wants to go. And in this case, we were expanding up, right? We expanded up and we got a nice strong close above the true session open and above the true day open, which is midnight, right? And then as you see right here, this candle here traded right back down to the true session open, to the tick, right? We traded right back down to it, to the tick, because the true session open is 52.93 even. And on this 415 candle there, we traded back down to 52.93 even on the tick, and then displaced away. Boom, took off, right? Got a Bissy right there. Now we came back down and we filled the Bissy, right? This right here is, you know, some of them fair value gaps that make me kind of leery, because it's like they don't be all the same color in the gap. So I'll be, I don't really trust that one too much. But it worked out. We came back down. We filled it. We respected it, even though we're closing below the consequent encroachment. It still worked and pushed us up higher. Filling in this SIBI from 145 yesterday, right? And then we pulled back down into the range again from where right there where we had the break-in market structure there, right? We had the break-in structure there, pulled back into the range. Tell them why you say that's a break-in market structure, right? Because this low took out that high. So we came down, swept liquidity there, came up, swept liquidity there, right? So we've gone from external to external liquidity, and then we came back down into the range. So boom, we're right there at the break-in market structure right there, right? And then we came down into your bullish breaker right over here, right? That's your bullish breaker right there, because that's the last one. We're moving up, and then we started to move down there. So that would be your breaker over there. And then, so, but if you want to get into what's the biggest body candle, that's your breaker there. I just go off of, you know, the move. This was the move. Price was going up, then price stopped right there, right? Price going up, then price stop. So that's how I look at it. I look at it the same way I look at my order blocks, but we're inside consolidation. So if you want to pick this candle, you want to pick that candle because it's got the highest high. You want to pick, it's all in the same area. I'm not going to argue with you. Right. And then we push back up, taking out the high. It was a nice strong push, right? Got back above the true session open for New York, but right now we're just kind of fiddle-faddling in that area right there. All right, so I would like to see what a going zone. We're not too far away from the consequent encroachment of the 4-hour SIBI. Did not touch this 15-minute SIBI right here. Right, did not. We got a 15-minute SIBI here. Draw it out for those who can't see it. All right, so we got a 15-minute SIBI there that we have not touched, and then we inverted this one here, and we're trading inside that inversion right there. All right, so if you look here, we inverted this one with that candle. I said we got a nice push up. Right, so we got an inversion. Now we're trading inside it. We're right there at the consequent encroachment, which is right there in line with the true session open of the New York session. All right, and that would be the 7:30 open based off of quarterly theory. Right, so based off of quarterly theory, the true day open, the true Asian open would be at 7:30 p.m. The true session open for Asian. The true day open is at 12 a.m. The true London is at 1:30, and then the true New York is 7:30. Right, and then a true session open for New York PM. I can't remember. I think it's 1:30. I can't remember though, because I don't be really trading that much during that time. But I think it's 1:30 because it's like 7:30, 7:30, 12. Because it's the first. It's the start of the second quarter. It's the start of the second quarter. So from 6 to 7:30, 7:30 to 9, 9 to 10:30, and 10:30 to 12, right? So yeah. And then so that's why 12 is the true day open, because that's the start of the second quarter. Because the first quarter started at 6, then the second quarter started at 12 on the day. So that's the start of the second quarter. So that's the true day open. And then inside the Asian, the start of the second quarter is 7:30. So that's the true session open of the Asian. And then inside the London, the start of the second quarter is 1:30. Cause that, it's like at 1:30. That's and then from 6, it started at 6, cause from 6 to 12, or from 12 to 6, and then the start of the second quarter is 7:30. That's why it's a true session open. And then from 12 to the end, start of the second quarter would be 1:30. So yeah, so it'll be 1:30 for the afternoon. Yeah, so those are the true session opens. I think I put it inside the Discord one time, and so I don't know why I was just sitting there racking my brain trying to remember. Let me go look and see if I put it. Yeah, I'm done with the overnight price action. So if anybody got anything, feel free to ask. If you're inside the Discord, feel free to pop in the Discord and ask a question. And did I put it in a rabbit hole? I might have put it in the rabbit hole. Yes, I did. There it is right there. Right there. So the true year open, April 1st. That started the second quarter. True month open is the second Monday. True week open is Monday at 6 p.m. Right? Because that's the start of the second quarter. That's the second day. Right? True day open is midnight. True session open is 1:30 for London, 7:30 for New York, and 1:30 for the afternoon. Right. That's it right there. I put it in the rabbit hole. I don't know why I was sitting there trying to rack my brain. I could have just looked at that. I don't see anything in the chat. And nobody popped up in the Discord. So I'm going to say that's it. I appreciate y'all for hanging out with me. Hopefully I said something that was of benefit to you. And again, this has been another episode of the Overnight Price Action Review. It's your boy, Aranya Grande. Oh yeah. I talked about Apex Extended. Yeah, Apex Extended. I talked about that. I can't remember who asked for it. I'm sorry, I can't remember who asked me. But Apex, they extended it through Memorial Day for 90% off. So through Memorial Day, I like to do the 25K. You know what I'm saying? Because it's 1-to-1. It's 1-to-1. You get 1,500 in drawdown, and you got to make 1,500. All right, it's 1-to-1. That's the reason why I like to do the 25K. As it goes up, it gets like the amount you got to make. It gets harder. I ain't gonna say harder, but you got to make more based off of how much you're risking. Right? A lot of people like to do the 50K. because I think it's 2,500 to 3,000. You get 2,500, but you got to make 3,000, right? So it's a little more than 1-to-1. I like the 2,500 because it's a small target to hit. Because once you hit that target and then you pay the assignment fee, you got to hit that same target again plus $100 before your trailing drawdown stops following you. You know what I'm saying? And you can't withdraw until you hit that target again. So I just like to go for the shorter, the smaller ones. And then 90% off. I got a affiliate link down there. I appreciate everybody that's been using my affiliate link. I said, hey, maybe I need to talk about my affiliate link more, because it seems like the more I talk about it, the more people use it. And I appreciate y'all, because you know, you getting it for like right now. If you got a 25K account, it's only like it's less than $15 for the evaluation, right? It's less than $15 for the evaluation, and you know, I get, what is it? I think 15% off that $15. So that little dollar and some change. Let's do the math on that. I never really did the math on it. Let's do the math on that. See how much it is. So let's just say it's 14 some change. We're just gonna say times. So that $2.25 be adding up. I appreciate y'all. I appreciate y'all for $15. Yeah, $2. I really appreciate the ones that be like, people going in. Some people go in and buy 5 accounts. Some people go in and buy 10 accounts. You know what I'm saying? I appreciate y'all, man. It adds up. It does. Anyway, that's it, man. The market is open. The market is open. The market is open. If you're going to trade, please trade safe. If you're not going to trade, please take a copious amounts of notes so you can go back and study what you saw today and apply it to your future trading endeavors. Till the next time I decide to jump on Al Gore's internet and share my thoughts on this thing they call price action, which will more than likely be Monday morning at 9 a.m. for the overnight price action review. Y'all be safe out in these trading streets, man. Gone.